Hey, James here. I wanted to make a series of videos going over some of the basics of how I analyze the market. Every Sunday I put out a video. Basically, it's a fractals video. I do other types of analysis and use other tools to help me understand and see what's going on in the market. So I thought I would make a video this afternoon and hopefully make it a series of videos. It's a bit of a snow day here in the south, which is very rare. Everything is shut down. So I have some free time and thought I would share some knowledge. Hopefully you pick up something new or learn how to apply an old idea. Um, it's, I guess, standard disclaimer, I'm not a financial consultant, I'm not a financial analyst, I'm not certified as a financial consultant or analyst. Trade at your own risk, trade in demo, know what you're doing, understand the risks you're taking, etc. This is just to provide information that might expand upon your current knowledge and help you learn something new. All right, so without going too deep, the fundamentals of how I look at the market are based on multiple time frame analysis. Multiple time frame analysis is very important. You hear people talk about how the market is, quote, fractal, or the same thing happens on every time frame. And those are true, but the way the market operates on different time frames is a little bit different. And there are things you learn over time that are just, there's so much, it would be hard for me to make a standard list. But things you learn over time about how the market operates on different time frames. So for instance, here we'll just jump into what I would consider a multiple time frame analysis situation. I'm looking at this chart. It's currently Tuesday. Monday was a U.S. bank holiday, so take that for what it is. The market was open though, but it is a Tuesday, and we're on the weekly. And simply put, and this is going to sound very basic, but every one of these candles has an open, a close, and a high, and a low. OHLC, right across the top. You probably hear OHLC. Maybe you've wondered what it is. It's open, high, low, close. Every candle has got an open, a high, a low, and a close. My goal is to attempt to understand whether this new candle, when it's created for the week, is going to be a green candle or a red candle. Very simply put. Do I think this is going to be a green candle or a red candle when it closes at the end of the week? That's it. That's all I'm doing. How you do that comes with practice and tools as you learn how to use the tools. So in this specific example, we have this week's candle and it is Tuesday. Generally speaking, in a week, you're going to get some up and down movement, right? It may be part of a bigger picture, as in back here, right? These downtrending weeks. This one week where it was a green candle, we would call this an expansion and a retracement, and then another expansion, a low, an expansion, a retracement. What would we expect? Another expansion, right? That's just basics. So on the weekly, we don't get a lot of detail about what happened within the week or what's happening this week. All we know is that we have an open, high, low, and close. And you could potentially toss a coin and try to determine if this is going to be a red or green candle, but we can apply market mechanics and other analysis about market structure to help us, rule out certain scenarios and make certain scenarios possibilities. I guess as an aside, since this is the first video, it's important to, I'm making assumptions that we are all on the same page about probability. This is all a game of probability. That's all it is. We're looking for opportunities where the probability of our idea is higher than the probability of it going against our idea. And there are certain scenarios in the market where your probability is pretty good, right? You may not get it right every time. You may get stop hunted. It happens, right? Whether you believe in it as a personal stop hunt or as a liquidity pool that exists that gets stop hunted that you just so happen to be in, those are the things you learn through time. So in this specific example, though, I'm looking at only this candle right here. Okay, so for this candle, we're trying to figure out the probability of this candle being a red candle, this candle being a green candle, this candle moving down, up. What is it going to do, right? And what is it leading up to? Maybe it's leading up to the next candle being a down candle or an up candle. And we can read that candle this one individual week, just this week, and the prior week, and maybe the week before, maybe 3 weeks in the past or so. We can read those candles and understand what's happening. So this candle just looks like a little red candle right now, and the previous candle looks like it made a green candle, and the previous candle to that looks like it made a pin, whatever you want to call that, a doji, whatever name you want to apply, but it has an open, high, low, and close, and it did something during the week, right? It went down and then up effectively. So what I like to do is ride momentum. You could call me a momentum trader. I'm looking for the opportunity to jump on a momentum shift, right? So I'm sorry, I'm dropping a lot of information. I just want to stick to multiple time frame analysis to begin with, all right? So on the week, we just have this candle. At the beginning of every week, I sit down and I go through all the pairs and I look for potential scenarios where this weekly candle that would on Sunday evening barely exists, right? It just opened, the market just opened, and that candle barely exists. But what we want to do is try to figure out how it's going to form throughout the week and then try to make a play based on that. So let's go to the daily and talk about what we know so far this week. And let's use this one because it has a lot more of the stuff that I normally trade with. Okay, so when we're talking multiple time frame analysis, I tend to have at least 2 time frames on my screen when doing multiple time frame analysis. And I use the reference of the cursor. As you see, I'm moving it back here on the week to help me understand what that looks like on the daily. So I tend to do the beginning of my week analysis pretty much always on the weekly daily, and then go from there during the week. So this is a good example. I think we could walk through this as an example of forming a bias for the week. So I also have up here sessions, and we're on the weekly, or this is on the daily right now, so sessions aren't very useful on the daily, but as we go down the time frames, we'll find a better use for them. So let's start by figuring out where this week began. The beginning of this week happened on this yellow bar. So this is effectively Sunday night if you're in the US. This is the Sunday open. This would be today. okay? And what we see here is that this candle, right, this big bar right here, did something. It doesn't matter what it did, just that it did something. It opened the week down here, and it moved up to effectively here. And if you look at the bottom, that's the high of last week, and then it closed there, creating a small wick. That's the structure of this candle, singular candle, on a daily time frame. A more interesting thing to look at would be the previous week. So on this candle, what happened? Or like if you're just looking at this weekly candle, I already said because it's I know it. It went down then up, right? So this momentum from this red candle, more down momentum from this red candle. This candle went down to a low, and follow along on the screen above. It went down to a low during the week, found that low for the week, and then moved up for the rest of the week to close above where it opened for the week. So simple, it went down and then it went up on the daily, okay? So that's a very nice example. So let's mark it out and just look at it on an even lower time frame. So we're just going to look from this Sunday to this Sunday effectively in here, okay? So let's go ahead and put that on the lower chart. This is all the multiple time frame analysis is. We're looking at multiple time frames to understand what's going on in the market. I'm just using this example because it's pretty clean. So here on an even lower time frame, and it may be difficult to see, but up here there are sessions. And this is my trading view. So, if you can't see them, make them brighter for yourself, but it is just weekend, Saturday, Sunday, and sessions. Those are the two I use, and then I've customized the date time for my central time zone. So let's analyze this week a little more. And now we've got daily candles down here. Remember, this was just one bar that made what we call a pin, right? It went down and then up for the week. So what actually happened during this week? Well, we can see that from the open of the week for about one day, we moved up slightly, and then we dropped pretty significantly for a day, came to a resting point here, dropped again for a day, made a low, and if you're following along the bottom, you can see each time I say a day, it clicks over to the new day, right? Here, we actually moved sideways, right here on the 4 hour, which is difficult to see on the daily. There would be no indication that we moved sideways here, right? So that's an interesting observation. That's multiple time frame analysis. We've learned something new about the market, that a daily, just two daily bars, could in fact be some sideways movement, aka accumulation or distribution happening right there. Then on this day, we moved up, closed this day here. The next day, moving into that day slightly sideways. The next day, we again moved up, and then moved sideways into the weekend. Slightly down, right, based on this daily candle, slightly down, but nonetheless, on the lower time frame, mostly sideways. okay? So the point here is that you use this in current time to understand what's happening during the week. So let's do that. We currently have 2 bars that represent this week. It's this bar and this bar. So we opened on Sunday evening here, had a gap up, and then we dropped. But without looking at this up here, all we know is that we had some sort of gap. This candle opened and then closed lower. This candle has made some move down and then back up, or down, up and down. How do we know, right? So that's looking at the lower time frame here. We can see pretty clearly that the Sunday candle, the candles that represent Sunday evening into Monday morning for the Forex day, which again, I'm talking in my local time zone. We just call it the beginning of the Forex week. Regardless of where you are, it's the beginning of the Forex week, right? And then it moved sideways through the New York session here, pretty much sideways, and then going into sort of no man's land into Asia, it dropped, made a low, and then it has been moving its way up to here. When today closes at 4 p.m., which is 30 minutes from now, this candle, this daily candle, will exist in that form forever, right? That's how that candle will look moving forward forever. So that's what we're trying to figure out. And I know it sounds very arbitrary, and maybe what I'm talking about doesn't match up with the ideas I'm trying to convey, but there's very simple ways to try to figure out what this candle is going to look like, and to read it throughout the week to determine what to do next, and then understand your risk about maybe your idea not working correctly, right? So I'm going to pause for just a moment to make sure I get on to the next topic. All right. So we've talked very, very briefly about what multiple time frame analysis is. It's the breaking down of a single bar from a higher time frame into sort of, quote, the next lower time frame. Traditionally, it's, you know, the weekly, the daily, the 4 hour, the 1 hour, the 30, the 15, the 5, the 1. Those are traditionally what we would refer to as sort of the levels of time. Even the month, but usually the month I only look at the beginning of the month. Anyway, how do we use this information to define a bias? All right. One way is fractals. A fractal is a very simple concept. A fractal is simply when this candle has a candle lower than it and lower than it, and then on the other side, lower than it, meaning the highs of these candles never breached this high, that becomes a fractal. This fractal is sealed and put in stone and forever reflected on charts when this candle closes. It requires 2 candles on either side to be a, quote, fractal. But we can use this information, right? We can look at the fractal and make a determination. The fractal is important because it potentially identifies a place that price went to and then retreated from and moved away from. And this again is a really good example of that. Just looking at the weekly, we can see that this down candle, which would be downward momentum, came to a very clear stopping point, precipice, whatever, peak, whatever you want to call it, and then went the other direction. Okay, so right now this candle is potentially a fractal. When this candle closes, and this candle must not go below the low of this candle, this will forever be a fractal. Okay, so on the weekly time frame, we can try to think ahead. Okay, so let's look at some examples from the past. Let's start back here, right? So this candle is currently not marked a fractal. At the open of this week, I'm going to say this week, meaning current week, not the actual week, because we're in the past, right? Just so we're clear. At the open of this candle, this week, this little triangle shows up right here. And if this candle closes the week and does not go above this level, which is 1.104 basically, then this will forever be marked a fractal. The key to this is trying to figure out if this is a retracement, right? So what I mean here is we're only looking at the week, but what we can sort of surmise is that we've gone up, we've hit some peak point, potentially hit a peak point, and then we pretty clearly dropped away from that peak point, and then we went up again, and then dropped away again. So we would want to see a low get created below this low, and then come back up a little bit, just like this candle kind of looks right now, and then drop away again to continue. So these look like three individual candles, but what this really is a high, a pullback from the high, a move up back to the high, and then a drop away from the high. And on a lower time frame, that might look like a very familiar pattern. Let's do this on multiple time frames because that's what it's all about. So we don't get the rewind feature on 2 panels at a time, so we're going to have to make do. But we can look at it, get rid of all of these lines, etc. Okay. So we'll just kind of do it like this. So we shouldn't be looking past there, because that's the week we're in the past. So what we can see here is the run up, which is represented by simple green candles here, and we can see that it's a very significant every day it moved up. It then looks like a peak and a drop and a move up and a drop, and we can see that reflected in the days. A peak, a drop, a move up, a drop, a move up, a drop. So even this one candle right here has got 2 moves in it. It's got a move up to the peak, a drop away, a move up again, and if you look at the bottom, I'm still in that week, a move up again, a drop away, and then the next week, a move up, a drop to a new level low, a peak to here, and then a drop. So we can only go with what we think might happen after this fractal. Is this fractal significant in some way? Did it interact with something in the past? Is it outside of Bollinger Band? Is it, there's lots of ways. Is the MACD divergent? There's lots of ways to stack on top of this, but just looking at a fractal, we can try to make some determination. So let's move on one candle. Well, it's actually giving me multiple steps during the week, which is nice. So we can see what happened during that week. It did, in fact, that's actually a very useful point. Let's look at that. Okay, so get to where we were. I like that it's giving me multiple steps. It looks like it's stepping the days, so this is perfect. Okay, so this is stepping through the days of the week, I believe. So we're on the weekly, and it's giving me, each click here is giving me 1 day of price action. So on Monday, the price went up. So it opened and moved up. If we've got this fractal telling us that we have a potential sell opportunity, then this move up at the beginning of the week is a good thing, right? It means there's generally, in any weekly candle, there's pretty much usually one move, meaning an up and a down. Sometimes there's two, like an up, down, or right, but a single move I call an up and a down, because the market has to move somewhere. It doesn't just stay in place, it moves constantly. So it needs to move either up or down, right? It can move quote unquote sideways, but really that's just a bunch of up and downs happening in succession, right? Succession, however you say it. So at the beginning of the week, this candle moved up, providing a potential sell opportunity for the week, creating a high for the week, right? This candle is currently pushing up, creating a high. The next day it drops right away. So it's made its wick. So this would be Tuesday. And I think that's right. We'll just, if I click 5 times and it stays on that candle. Yep, so then Wednesday, it made a significant drop. Looks like Thursday didn't do much, right? It dropped a little bit, didn't do much. And then I clicked one more time, didn't see anything happen, so we'll assume Friday didn't do much. And this should be the next candle. Yep, so this is Monday. Okay, so this is the week. So what's happening here? It opened on the Forex Monday and moved up. Tuesday, it has moved up. Wednesday, it peaked out. You see that it moved down just a little bit. If we were going to look at that on a daily, we would see just a peak, like a doji. And let's go look at it. Okay, so we're looking at this week right here. And we can see we went from the open of the week, we moved up, we moved up, we had a doji, right, that I just described, that doji right there. It didn't turn out to continue to be a doji, but at the time it would have looked like a doji. You see the candle moved up again a little bit. That's Thursday. And then Friday, it looks like a big green candle, right? So what can be said about this week? This week was a retracement, effectively. We know that because we have hindsight, but we peaked out, creating a fractal. We dropped away from it. We came back up and retraced, right? This is what a retracement is. So if we put a fib on here, Fibonacci retracement. From this point to this point, we retraced, right? We went down, we retraced, and then we dropped away. That would be a great entry. It would be confirmed by a fractal. It would be in a good discount zone. It has an order block here that is clearly being interacted with, and it has all of the things I need to say that I have a sell bias for the week. Now the candle's green and I have a sell bias. That means, yeah, all week long I'm checking this thing every day, maybe every 4 hours, every 8 hours I'm checking it, and it's getting more green and more green and more green. I still have a sell bias. I'm not going to hop on a buy after I see a fractal like this get created and confirmed, right? Because this candle closing and this candle closing confirms this fractal. So I still have a sell bias. So let's get into the next week. The next week opens, and from here, on the Sunday, on the Forex Monday, when the market opens, you can see it drops away immediately. The development of that candle the next day is minimal. You can see here that on the Forex Tuesday, it moved up and then down, but effectively created a zero change for the day. Open and close are pretty much the same. On an even lower time frame, this presents an opportunity. Where are we? From here to even here, having defined a bias of a sell and then seeing this happen and then having the retracement occur here on the Tuesday provides a sell opportunity. If we were to look at that on a 4 hour, it would be a lot clearer, but I'm not going to focus on that right now. All right, let's just continue the anatomy of a weekly candle and compare it to the daily. So it dropped, it stalled, and actually moved back up a little bit. So for some time, this weekly candle would look like a really, really small sort of red sliver, right? As the high here was created, it would look like a little red sliver with a wick in the bottom of it, right? And then the next day, that candle grows larger as a red candle, and the drop happens. And that day has an open, high, low close also, right? The next day, here, and then the next day, there. And you just may have noticed that there was a purple triangle below indicating a potential fractal existing here, and it was violated once this candle broke below that low, and it no longer exists. It won't paint forever. It won't be there forever. So you can get a fractal showing up at the beginning of the week that is just going to go away, right? And that's the trick. It's not a trick. Those are the skills you need to learn, is to identify the attributes of a good fractal. This is a good fractal, in my opinion. It's very clearly reached up and then retraced and then dropped away, right? Pretty clear. The fractal that existed down here, not so clear. It didn't really do any potential work. If you look at it on the daily, where it did exist would have been in here. And if we look at the fractals on the daily, there is one there, right? Because it does meet the rules. I don't use fractals much below the daily. It just gets too messy. I'd say the weekly and the daily is where fractals are the most useful. Below that, you're just going to have a whole bunch of false signals. And your bias, we're forming a bias for the week. This is a long-term game, right? We're forming a bias for the day. We're sitting down and trying to figure out if we think that the daily candle, when it opens at 4 p.m. Central Time, will it become a red candle or a green candle? And is there any significant thing that occurred prior to that to support the idea, right? So having a weekly fractal and then having it drop away and then having it retrace and having that fractal confirmed into the next week, that is a week where I would be looking to sell AUD NZD, right? And we apply that to any of these. And we do it current time. So let me pause and find a current time fractal. We have 15 minutes until it may go away or be confirmed forever. So I'm going to pause and look for one, and then we'll look at and we'll now analyze it, determine whether it's a good fractal or not. All right, we're at 36 minutes. Try and keep this under an hour. And in about 10 minutes, I have to do my job for the day, which takes an hour a day. Isn't that nice? So I pulled up GA. It just has a weekly fractal, potential weekly fractal that we can look at. And there was nothing wrong with the other one. It had a fractal also. It's just that this one, for educational purposes, is a little easier to read and explain, right? So what are we looking for here? The weekly, we're looking for general trend. And you can see these fractals help us see that. High, low, lower high, lower low. No fractal here, but lower high in this area. An equal or slightly lower low. A lower high compared to the last fractal. Could be potentially a reversal in direction, because this isn't a fractal we can compare against though, but it looks like a downtrend. So sorry if that's confusing, but let's just focus on the potential for this to be a sell bias for the week. So right now we have this candle. If this candle does not break this high, this fractal will exist forever. The very next candle could break the high. As long as this candle doesn't break the high, this will exist forever. Okay? Looking at the daily, we look at this structure that created the fractal high. It's a bit of an accumulation, sideways for 4 or 5 days, with some wicks that push down and then come back up. So is this a peak out, right? Did it peak out real hard and then move away to create this fractal? No, it didn't. It's not a necessarily bad thing. That's just what we're looking for. We're looking for that significant peak that occurred. A good example of a significant peak would be here. If we look at this day, then on the open of this week, right here, right, we would have a yellow triangle there. And if this high does not get broken, which it did not, by this candle or this candle, this fractal exists forever. Okay? In this example that we're currently looking at, we are trying to make the determination, do we think that this high will be respected by this candle or the next, meaning this week or the next week, right? Do we think that this candle is a high that will be respected? Because if it is, it gives us a great stop loss location. That's the meat and potatoes of it. We're trading, right? We're looking for trade opportunities. We're looking for stop loss locations and entries. If we have some high degree of confidence that this candle is not going to be violated I use that term, I guess some people, I should find a better word, but that's what I call it. It's a violation of the high, right? Like we respect or violate, right? Those are the two logical outcomes. We're either going to respect this high, no matter how long. We may respect it for a day, we may respect it for a month, we may respect it for a week or 4 hours or whatever. We're either going to go through it or respect it, right? So if we go through it, we've violated it. We've not respected it, right? So the first thing to look for here is ideas around, are we going to respect this high? And short answer is, it looks like it could be respected. And the reason I say that is because of the things that happened in the past and where this fractal is occurring. The fact that it's occurring in a downtrend is a positive thing, right? We're naturally having downward momentum. Now it goes up and down as it goes down, but it's naturally moving down. We're retracing currently in this week up to that high. Now, are we going to go above it, or are we going to respect it and retrace away from it? Right? That's the risk we take. So how do we make a determination? Multiple time frame analysis. Is there a reason for us to move above this point? Well, we're in a downtrend, so we should be seeking liquidity on the low side of things. So we should be looking for a low side target. Do we have a low side target? Equal lows. That's a liquidity pool that exists on the low side. So if we're liquidity seeking to the low side, we have a pretty clear low side target. We need fuel for the fire. Those two lines represent what I call fuel. If we're low side liquidity seeking, every retracement that occurs is actually just picking up contracts to carry down, right? If we are thinking like a bank and we want to get to here, what do we need to do to get to there? We need to sell. In order to sell, we need people who are willing to buy from us. So we create a pool of orders, right? We move up into that pool of orders during the week, which is what's happening right now. And then once we've gathered enough orders, so if we're thinking like a bank, we're selling, and we're selling at a good price. We're selling at a high level. We're selling above the previous highs, and it's a good spot to be selling from. And then once we've gathered up enough contracts that we've sold into the market and people have bought, we drop to the other side into the liquidity pool, right? The natural reaction there is that we're going to be buying, right? So we were sellers up here. We are sellers up here. We're buyers down here. When we offload our contracts and buy, it naturally causes price to move up again. Then we sell again, etc. You don't see that in a single weekly candle, but when you look at it on the 4-hour compared, this one weekly candle broken down into 4-hour chunks is telling us a lot, right? It looks like an up candle, but in reality, that up move has only happened very recently, right? Right here. The previous week was an accumulation. and even the week prior was an accumulation. So we've definitely made a target. We're currently in a liquidity pool, and we're in a downtrend, and we have a fractal that we could say, if it goes above this fractal, we're probably wrong, because it violates the fractal. The fractal is the reason that I even looked at this, right? So do I think that price will move from where it currently is to, and let's get rid of all this junk. Surely there's like an eraser tool. I actually never used the eraser tool. I always just kind of Control Z. So let's do that. I'll just Control Z. Okay. So that is that. We're looking at a green candle for the week. Right now it looks green. And there's two ways to think about this. This candle could be expansion, retracement, expansion. That would indicate that this whole trend is changing direction, which we don't want to give away quite yet. It's not, we're not there yet. Maybe we are. Maybe this is the very, very bottom for the month and we're moving away from it, right? Or the year and we're moving away from it, and this will establish the low for the year or month or whatever. But looking at this time frame, these two time frames combined, right, and having dropped down from the weekly, the daily to the 4 hour, gives me a fairly high confidence that we should try to sell this. I should try to sell this, I guess. And it gives me a very clear place to put a stop loss. So where do we sell from? Well, this is where the basics come in. We've got the last up move, down move. We've got a gap in here. We've got a liquidity pool that we're moving up into. You can use fibs if you want. I kind of haven't used them in a long time. I just kind of look at it. But high to low, right? From the fractal high there to the current low, which is equal lows, which is great. We're moving up into, we just hit the 61-ish. That's the 71, haven't quite got there yet, but the 71 lines up very well with the gap. So if I were to place an order, it would look something like this. I know my idea is not valid if it goes above that fractal high. Now, I need to figure out if it's worth it. Every trade I take, I try to make 3 to 1. That's my goal. Each trade 3 to 1. I'm not greedy. I try for a high accuracy 3 to 1. Okay, so let's take away some of this mess and determine whether we think this is worth it. Doesn't matter how big the stop loss is. People brag about a 10 pip stop loss, a 5 pip stop loss. It matters in the perspective of time, like pretty much the lower the time frame you're on, the lower your stop loss can be, therefore the lower your profit take can be, therefore the less time you have to spend in the trade. So there is that aspect. If you want to spend less time in a trade, going to lower time frames and thinking about that is significant. But we can look at this very simply by saying, well, what happens in a day? So we go to the daily and we ask ourselves, well, what happens in a day? How much movement happens in a day? Well, on even this day, there's 80 pips of movement. Okay. On this day, There's a lot, 145 pips of movement on this day, 50 pips of movement on this day, 80 pips of movement. So we ask ourselves, can we expect 200 pips of movement in a single day? Probably not. Could we expect 200 pips of movement over the course of 2 or 3 days? Absolutely. And I'm okay with that. Right? It's just, looking at these bars and saying how you can use average true range, but this is how I like to do it. So that bar is 140. So in one day, the high to low for that bar was 132 pips. So it's very reasonable to think that from this point, we could drop 100 pips. That's very possible, right? So you got to think of it in proportion, not necessarily as a 10 pip stop loss. You think of it in proportion. So in proportion, this seems like a good trade. And the expectation, again, is that this high is maintained for the week, that this point is maintained, that this green candle will push up, hit here, create a wick, and come down, and then either turn into a red candle on its own, or the next week potentially turn into a red candle, right? And it has all of the lower time frame attributes that we look for in a sell opportunity or even a buy opportunity. But where's the money? Where's the liquidity? What are we doing right now? It makes sense. We're moving up into a liquidity pool to sell from, to get down into a liquidity pool to potentially buy from. But as long as we're within structure on the higher time frames, it doesn't matter. Theoretically, we could trade this all the way down to here and still technically be in structure, right? It doesn't matter what happens between this point and this point, right? Let me try to explain this a little more clearly. So when I want the drawing tool, it's gone. Okay, so let's delete firstly that just to get it out of the way. So what I'm saying about structure here is this high exists, this low exists. Okay? The whole world's looking at this chart, not just you and me, everybody in the world, every broker, every stockbroker, every Forex agent, every desk trader, everybody in the world's looking at this chart, right? So if a new low were to be created, it would be considered a continuation of a downtrend, right? If price were to come below this point and create a new low and then come back up, it would be considered a continuation of a downtrend. We've got a high, low, high, low, high, low, high, low, right? And we're continuing to move down, all right? We have no guarantee of that occurring, is the point I'm trying to make. The guarantee that we have is that we will either respect this level or not. And I know that means nothing, but bear with me. If we're going to play as safe as possible, then we want to make sure our trade can occur and we can get out of our trade in reasonable profit before we even attempt to test that level, before we even have to figure out whether we're going to go below it or not, right? That's what I'm after. I don't want to have to make an assumption that we're going to break this low because I don't know if we are. We may respect it. Violate a respect. We may respect it. This may be an expansion, a retracement, and an expansion. That could very well be true. That's not going to stop me from playing a sell when there's enough room in structure to allow for it, right? So that's why I like playing on the weekly, daily, and then using 4 hour, 1 hour to enter, because on the weekly, daily, you almost always have enough room within structure to make a move, even if it's counter trend. So what we may expect here is a retracement that will not violate this low. Is there a reason to go down there? Other than the general liquidity we're creating here, yes. We have some we have some stuff in here. Without going into the details of what that stuff is, there's some stuff in there, potentially stuff in here, and potentially, stuff left over from down here. Potentially here, where we pushed away real fast and didn't really get the opportunity to revisit it. We did drop down into it slightly and then reacted very hard. So that may have been of note, but we're working our way back up. We've got the liquidity, and we would expect to go to there. I would not try to go lower than that, because that's the first place where there's the potential for trouble. Right? And I don't like trouble. I want to stick with inside structure. I don't want to try to fight structure. I don't want to try to have to invalidate structure. I want structure to be on my side. Okay? So, doing the quick analysis of the short position that we want to potentially enter, about a 65 pip stop and 3-to-1 puts us right there. So I'd feel comfortable taking this trade. Right? And we've only talked about the strengths of this trade. We haven't talked about the weaknesses of this trade. Right? So what are the weaknesses? This is a SWOT analysis. Strengths, weaknesses, sorry. Strengths, weaknesses, assets, and threats. Right? So you don't have to do the full SWOT, but what are the strengths and weaknesses of this trade? What are the factors that could go against us? Right? We're supported by a potential fractal. We have a lower time frame structure that makes sense. We have a target that makes sense. We've reacted from a place that makes sense. Didn't even talk about that. Right? What's the threat? We could be completely wrong. We could be liquidity seeking to the high side first. That's very possible. This could have been, we pushed up, we're accumulating, and we're accumulating long contracts. So we're buying, the bank is buying to continue long, right? So every time it peaks out and drops, they're buying. Peaks out, drops, they buy, right? And then they eventually say, okay, we've got enough contracts long, let's take them up and then distribute them and make money. Or they could be distributing here. They could be selling off contracts that they purchased down here, right? They could have purchased the contracts down here, they've been carried up to here, and now they're selling them off, right? Once they're done selling them off, they may decide to go up. Once they've sold them off and accumulated new contracts at this level, right? If they're selling, there needs to be a buyer on the other side, and that buyer may get screwed, right? So if you're buying here, then the bank is selling to you in that scenario. I'm sorry, it might be overcomplicated. Effectively, I'm working through the possibilities, right? What's above this point that could invalidate the idea? Well, there you've got some wickiness back here. Could we have an impulsive move from this point that moves up into this level. I don't see why, but maybe. Is there liquidity resting above this level? And there's not really any equal highs in the past. I mean, you've got this, but I wouldn't count that. I would say no. So I picked an example that has very few threats, effectively. It has a lot of strengths, very few threats, in my opinion. So as far as doing an analysis and using fractals, that's it. Apply the other knowledge you know and use fractals to define a bias. And then look for the evidence to support the bias. And make sure that that fractal has got good lower time frame structure to support it. All right, the one turn off about this one, maybe the one threat I would consider, is that this isn't a radical enough fractal. This fractal doesn't have a real big wick. It doesn't really, I mean, it seems to have reacted to a location that makes sense right here, but it is not a significant drop. It did significantly drop, but then immediately rebounded, right? You can see it made the high here. It even would have looked like a fractal, but anyway, so it dropped away, bounced up, created a high. That's the fractal high. Dropped away, made an equal high to build liquidity. We just broke into that high, so we may expect an interaction with this structure to sell. And I'll use this box. Well, okay. That's an imbalance. Those are always blue for me. And then we'll draw one as an area of interest for this. Basically from the top of that imbalance to the top of that candle right there, that 4-hour candle. And we're still on the 4-hour. We haven't gone much lower. And we don't really need to for this trade. We could just for confirmation, but area of interest. Okay. Oops, wrong button. So let's go ahead and drop lower. So we'll look at the 1-hour. So that wick of, let's look at the 4-hour real quick and see how this candle, we created a block, we dropped away from it, we made a wicky candle that doesn't look like much, but it's significant. Look at what it actually did. Up, drop away, come back up. We made an equal low, come back up, take care of that, drop away. I'm not saying you would play this. This isn't a hindsight 2020 situation. This is confirmation of our idea, current idea, right? So the idea that there is this move that occurred here and then a drop away that occurred after it very well could have redefining the area to there. And then looking at it on the 4-hour, I bet you it's that little wicky candle. Look at that. Sure is. Right there. So to have a very safe entry to there, filling the imbalance, aligning with the 71 fib, I think it was, and then maybe expecting some drawdown into this area as we do a cleanup operation, and then we drop away like we wanted to. I'm not saying that's how it'll play out. I am saying that that's what I look for, and this is a trade that I would take. based on this analysis. All right, we're at an hour. So that's it for today. I will be covering maybe MACD next time I have an opportunity. Have a couple other topics, but hopefully this is not overwhelming. I'm not trying to overwhelm people, but I'm going to speak at the level at which I understand things, and then it's up to you to fill in the gaps. If you think I'm wrong, that's fine. I think I'm wrong all the time. So in any case, take care and have a good day.